First thing first, futures, the contract that we used to track that the ESZ that is gone, right? The contract now it's in front. This is the month in front too. The ES1 again. This is the one that we need to be following. The December one is gone, so gotta go back onto this one now. Right. So where is that? It's been in a decline. This is rather, I mean, here it wouldn't make a lot of sense, but you can still follow the technicals. 8 below 21, it is still intact. That is still going. Very likely it will bounce somewhere about here. If it bounces, then we can expect the bounce to come in about 38.83. That clears 38.84, and perhaps will end up at 38.87. That's on the lower time frame, and on the 1 hour time frame, it looks like it still wants to go down. It probably has this number 38.70 after the bounce. The bounce is coming from the technicals here, and we still have, I think, after this bounce, maybe into the mean, or maybe into 38.85, or as we are predicting it, probably 38.87. Either one of these will trigger a push to the downside again, and very likely it'll end up at 38.74. But here it wouldn't make a whole lot of sense watching it here. Uh, and then to the downside, we still have this 37.85 to get tested at some point in time. So right now, the difference between the ES and the SPX is about, I think, about 30 points, right? About 30 points or so. So yeah, keep that in mind. So 37.80 on ES, that would mean that about 37.30. Yeah, 37.50. Sorry, 37.50. That would mean 37.50 on SPX. That is still there. That is still out there. But right now, this is it's bouncing off of very good levels. 38.7, 38.50. We hit that I think last week. It's bouncing off of good levels, and here is the first decent resistance that it is coming across. If it clears there, and very likely it's going to push all the way into 39.30 or somewhere about here. We'll reassess the situation up here at 39.30 if it goes all the way up there. But that's still the bigger picture. And to the downside, last week lows are still by and large, this should act as pretty decent support around here, 38.60 area. And if that reaches, then we'll look for further downside, 38.50, 38.60 on the ES. And that would mean about 30 points further down on SPX. Right, 38, 30 area, 38.30, 38.20. Last week, 38.20 was supposed to get tested, but 38.20 SPX did not hit 38.20 last week. We'll look into that as well. But here is the chart that would make a lot of sense right now. The DXY, of course, this is a derivative of this chart. Right, so right now, this chart makes a lot of sense, and because this chart, the US 10 is bouncing back, very likely it's going to hit this 3.6, and if that clears, very likely 3.64 to 3.65, right? And that's the reason the futures have pushed down. And let's see if it clears the mean here again on the month and starts to rise back. If that happens, then very likely the markets will pull to the downside. However, I'm still thinking that whatever will happen here is very likely, at least this bounce, this upcoming bounce, or the bounce happening right now. I'm expecting this to be an ephemeral bounce, perhaps push down from 3.60 or 3.65, somewhere about here. Why? Because I still see this MACD cross to the downside. So very likely this downside will continue after this bounce. But I just don't know where the bounce would end up, right? So looking at that and looking at the same data on the day. So last week, the trend was that 8 below 21, and the 10-year was pinned below 8 on the day. Now it has cleared this resistance right about here, 3.55, and we were expecting it to clear that, and the mean reversion is about to happen today. Very likely it's going to hit this 3.58. or something like that, and probably take first breather from there. And after that, if it comes back up here at 3.58 and clears the 3.58, expecting it to hit 3.66, and then if that clears, very likely 3.61. But this is the larger picture, right? 3.60, if that clears, then about 3.64 to 3.65. That's the bigger picture. To the downside, I don't know where it's going to get pushed down from, but if it does get pushed down, very likely 3.46 to 3.45 is what we're watching to the downside. And very likely we should get our first breather here. If that clears, then the second breather here. And if 10-year take this path to the upside, very likely the markets will move to the downside. So far, that's just I mean that's just how things work. Last time it tried the mean reversion, but didn't work out, right? It couldn't reach the mean and it got rejected. I don't know if that's going to happen this time around as well, but hoping for something similar to happen. Last time around, the we could have clearly predicted that it would come down from here because we had MACD on our side, right? MACD was still pushing to the downside. Now the case is different that the MACD is starting to cross to the upside. If the MACD starts to cross to the upside, then very likely we'll start to make a trend, at least on the daily time frame. All right, let's get into, DXY. This is again the derivative of US 10 or whatever the interest rate that you are looking at, a 2 year chart, a 3 month chart, or whichever chart that you prefer looking at. It's just a derivative of that, right? So expecting the if the 10-year moves up, then expecting the DXY to move up too. If it clears right about here, then expecting it to hit 105.42 to 105 right about here, 106, 106.15, right? Same thing, 5 clears, then it's going to hit this 105.75 line. If that clears, very likely it's going to hit this 106.20 line. 5 8. And to the downside, we still have this acting the 50 moving average on the week that is still acting as pretty decent support on the higher time frame, and it's supposed to act as a pretty decent support on the higher time frame. And the other thing is that the RSI is all the way down here. So anytime that it hits the bottom of the range, we expect it to push to the upside. That's just how technicals work. And the trigger is provided by a major moving average somewhere down here, which is the 50 on the week. So that is providing a support and a bounce trigger. So all of that is happening. Uh, I don't know where it's going to head into. Probably 105.40 and probably 106.30. Whatever this is, however much bounce, and the mean on the weekly is sitting all the way up at 108.80. I think if it takes this projected path to the upside into the mean, then probably markets will start to move to the downside. And by and large, for this year, I think the market bottom is in. I don't believe market is going to go below 3,500 this year. Making a new low probably is a story for next year. Next year, first quarter, probably. Your voice is low and you can hear a lot of background. Huh. Voice is low. Hang on, just a second. Let me fix that. But now, better. Let's. Okay, cool. Where are we? DXY. So if DXY is right now bouncing off of pretty decent levels, and very likely it's going to push to the upside. And until so push to the upside is fairly easy to look at. But here the downside, if it breaches 104.52 here, then we're going to test this 50 MA again, 104.16. Now, if it now the big question is whether DXY is going to breach below the 50 on the week. If it does breach below the 50 on the week, then we still have further more downside on the DXY. As of now, I'm not plotting that. As of now, I don't see a path for that to go down further. Probably after a bounce, probably after these technicals kind of get resolved, then probably we'll look for further downside on the DXY.
below the 50 on the week. Right. DXY, and let's look at the same data here on the daily. Very likely, again, I was expecting it to kind of revert to the mean. But as of now, that is not happening. I'm still hopeful that it'll revert to the mean, and then we'll have some more downside in the market. And the reason I'm looking for the mean reversion is because of the MACD. MACD is starting to curl to the upside. Doesn't mean that a couple of days would make a trend, but still, if the MACD is curling to the upside on the daily, then we got to keep an eye on that. So if to the upside, if DXY moves to the upside, 104.96 to 105 is the first breather spot. Then if that clears, very likely it's going to push all the way into the mean on the daily, looking at 105.29 to 105.30. If that clears, very likely 105.55. And I wouldn't be taking DXY seriously till it clears the 200 on the day. 105.90 to 106. That's the number I'm watching. This purple line. Right. So till it goes to the upside till here, it will be a trade. DXY up, then gold down, and precious metals down, and very likely the risk assets, including crypto, will be down. So that will be a trade till here. But if it clears this number here, this line, the 200 on the daily, that's when I'll start to take a strategic position to the downside. Then I am okay trading the downside. I'm not putting on any thematic or strategic position on the market just yet. Probably after December, I'll look into that. But right now, I think the market bottom is in for the year. We'll look for a new bottom next week or something like next month into Q1. But for now, I'm not looking to breach the bottom. 3,500 is the bottom for the year. And again, if DXY clears this 200 moving average to the upside, that's when I'll start to make certain assumptions about the market downside and probably start to put a strategic position to the downside. Right. Let's look into something else, which is oil. Oil, we were pretty on spot with oil. Let's go here. Excuse me. Right. So we knew oil was going to come back down here, and very likely it was going to make a stable bounce around here. And so far, it did. And so far, I think it's going to hold these lines till I think there's this SPR thing happening, and all that is happening. So I think it will hold. And China reopen, basically SPR and China reopen. So those things are happening, and I think the oil will hold this level for a bit to come, probably even in the Q1, and probably actually I think oil will mark the bottom around here, around 70 71 area, or worst come, I think 64 area should be the bottom for oil. And yeah, on the U.S. oil side of things, Brent, I'm not sure, a bit higher maybe, but oil, U.S. oil, it will be. I think it will trade within these lines, 64, 63 to the downside, and probably 80, 81 to the upside. This is the range probably for the next 6 months. If China reopen continues without any major hiccups, then very likely it will go all the way up into 85 to 90. That's the range that I'm looking at for oil. Right. Let's get oil. So oil right now is in a bounce state, and very likely it's going to go test this number again, probably 76, 50, 76, 80. If that clears, we're going to test the 77, 75. If that clears, 78, 75. That's the way I'm looking at oil, not looking past the 8 on the weekly for oil as of now. Downside, again, that 64, 65 to 63 line, that is still intact to the downside. I think that should act as a floor. As of now, we're bouncing off of good technicals here, so very likely it'll test this number again. If that clears, we'll look for further upside. And the reason that I'm bringing up oil, I'm not trading oil yet, but the reason I'm bringing up oil is that if oil holds, then very likely the market will hold. And wherever that bounce will come from, I don't know, 73.70 or I 70, wherever that bounce will come from, and if oil starts to push to the upside or at least hold the upside. I think oil will test the 76.59, 76 again. Mean on the daily. If that clears, we're gonna hit the. We're gonna try and test this the 21 on the day. And if the 21 clears, then we'll reassess oil to the upside. And to the downside, again 73.69, 73.70. If that breaches, very likely a pushback into 70 area. 70 area is acting as a pretty decent support right now because, again, two factors: China, and then the other factor is the SPR, the filling back of the SPR. Right. And we still have the MACD cross to the upside for oil on the daily. So looking at that, I think the oil has some more legs to the upside, or at least it's going to hold this line here. Right now, let's get into VIX. VIX is still in a bounce state, right? VIX is still here. So far, if you're looking at the SMI, it is trying to cross to the upside, but with given with everything that is going on around the pessimism, the whole interest rate theory and whatever not is going on, the upcoming recession, VIX seem to be rather calm. I don't know why. Uh, and VIX basically is the put to call, right? Put to call. So if people are buying more calls, then VIX will go down. If people are buying more puts, the VIX will go up. That's as simple as that. So and seems like VIX is not really bothered with. Looks like people are not buying protection. That's what it clearly looks like. I don't know the reason behind it. I don't know. I don't know pretty much why is that happening. But so far, seems like people are pretty complacent with whatever is happening. VIX is not moving the way it should have moved based on the move down in SPX. I don't know if you can contribute that to the people's sentiment of probably Santa rally, yada yada yada. I don't know, whatever that is, but that's the reality on the ground. That VIX is not supportive of the move to the downside in SPX. Let's go VIX here on the day. Looking like it wants to hit this number right about here, 2311, and right about here after that, 2403. And we'll reassess the VIX after 2310 to 2320, this line right here. If it crosses there, then we'll reassess the VIX into 24. But as of now, not really plotting that. And to the downside, the 5 and 8 should act as pretty decent support, 2250. That breaches, then we'll reassess below 2230, somewhere about here. If VIX falls below 2230, then we'll reassess it to the downside, very likely pushing it into 2180. But as of now, it's in a tight range: 2210, 2220 to the upside, and 2230, 2220 to the downside. My I don't know, hunch or whatever you want to call it. My thinking is still to the downside before it starts to bounce around the mean. I think that's what I want to see VIX do. Right, and let's get into Apple. Still have time. Let's get into Apple. So Apple, I was looking at probably 133 area bounce, 133, 133 area bounce. Last week came pretty close to that. About 133.73 was the lows for the week last week. I'm still thinking big Apple to the downside, perhaps 129, 130 to the downside, or at least here 132.40 to 133 area to the downside, and then a bounce from there. If that breaches, then probably 129, 130 to the downside. As of now, not really plotting 113. Probably 120 is the area that Apple will probably hit. I don't know this week, probably next month or something in the new year. But Apple and Microsoft and the major companies have guided down already. So if the earnings contraction happen, very likely Apple will push. I think there are 9 million to 11 million units short already. If that materializes in Q1, then very likely the Q1 numbers will push Apple down, perhaps here into 190 and 120. If that breaches, very likely into 112. And not plotting anything below 112 for Apple as of now. Things could change, but not plotting anything below this 112, the 200 moving average on the week for Apple. I don't know if it's going to go there, even after the earnings, but this is an earnings story, not now. This is the earnings story. 8 below 21 is still valid. That number, that technical is still valid. 8 below 21. Unless that changes, I don't see much upside for Apple as of now. And again, this is a majority of this is depending on how China opens up. And China, certain economists or certain banks are plotting China at about 5.5 to 3.5, right? So that's a big range for China. I'm hoping anywhere between 4.5 to 5. I think 5.5 is ambitious looking at what's going on right now with Shanghai and whatnot. But yeah, 4.5 to 5 is within reason for China. And if that happens, I think the US market should also be okay with that. Let's get into Apple here. And right now, Apple is still looking for a bounce based on the technicals here. The RSI is all the way down. And even if it bounces, very likely it's going to be an ephemeral bounce. And the 5 is detached all the way at 139. Not really looking to hit 139 today as of now. Probably, I don't know if it pushes to the upside. Very likely it's going to test around 137 area on the based on the daily. Let's go here on the 15 minute. It's getting oversold. Very likely either a bounce right about here or just about here, 134.50, 134.60 area bounce right here. We're gonna look for a bounce either here or at this super trend, 134.40 area. So this is the chart that I usually watch, and this chart is still telling that MFI was all the way down here. Then the MFI started to push to the upside, bringing up the price along with it, and as Apple moved to the upside, the market on the Friday it moved to the upside as well. So that's what happened today. Again, if it clears the mean here at 135.40, 135.50, expecting it to move into 135.90 to 136. And the 21 is sitting at about 136. If it clears this number, 136 on the hourly, then we'll look for further upside, probably into 136.75. But as of now, to the upside, this is the path it's going to take. The mean is at about 135.40. That clears, very likely it's going to test this 135.90 to 136 to the upside. Not plotting anything above that, but if it clears there, we'll look for that upside again. To the downside, very likely Apple will test this 133.80 to 133.70 range. If it clears below there, then once we still have to deal with 133. And if it's unable to bounce there, then very likely it's going to go down into probably 130 to 129. For our chart, this chart, I'm kind of following this chart, but putting more weight on this chart. But for a longer time frame, this chart is still valid. Usually, if it clears, same thing. If it clears the 5, then it's going to go test the 8. There is a bright chance of that happening. I'm still waiting on the MACD to cross here. I'm still waiting on this, what do you call the MFI to cross to the upside. But all of these things work in cycles, right? Got oversold, came up, got overbought, got oversold, again half a cycle, getting oversold. And if it starts to push to the upside, the MACD crosses to the upside, the MFI, basically the MFI starts to move to the upside, and very likely we're going to see one more push to the upside. Again, the push, if it clears the 5, then we're going to look for an 8. And these lines are dynamic. So as the data populates, then these lines will start moving. And if the 8 clears, then very likely we're going to push all the way into, we're going to look for a push into 139. But as of now, that's not the plan. As of now, the 5, 135.50 area, if that clears, then 136 to 136.25 area. Let's get into Tesla a little bit. Tesla is not, it's not a technical story, so there's no point looking at technicals. As of now, it's the selling pressure from institutions and basically from Elon Musk himself is unloading a bunch of equity in Tesla, so that's causing the market that's causing Tesla to push to the downside. How much of a downside? Just based on how much he's selling, you can't really put a number on it. But technically, if it breaches here, which it is threatening to breach, and then very likely if Apple starts to come down, that is more selling pressure on Tesla, then very likely it's going to hit this 132, 134 range, right? So we'll look for another bounce here. If that breaches, we are looking for a further push into 120, and then if it 85, I don't know if it's going to do 85 as of now, but very likely if it can't bounce here, forget bouncing. It should have bounced right here, but the selling pressure is too much from the institution. So I don't know if we're going to look for a bounce, but I'll keep trading it. And if it breaches here, very likely it's going to go push all the way into this 132, 134 number. Anywhere between let's put that a range in between 130 to 134. We'll look for another bounce there. And let's go back here. And if the bounce comes up and this is still the resistance, still the resistance to the upside, if it pushes all the way into 160, if clears there, and this line, the 200 moving average on the week, this will act as pretty decent resistance. But if that clears around 164, then we'll look for further push into 177. As of now, this is the upside target. If it clears there, then we'll reassess the situation into further upside. Let's look at the lower time frame. So the lower time frame is just think if it bounces, everything is it is looking for a bounce, but that's just too much selling. So nobody wants to be in front of that in front of that kind of selling. Nobody wants to be buying that trade right now. So, but if it starts to push to the upside, very likely it's going to test this 5 at 159. That clears, we're going to push all the way into probably 164 to 163.60. So that seems consistent. At 163.60, 164 number seems consistent. But again, depends. It depends. Right now, probably the fastest trade that I'll be in is Tesla. Tesla looking like it's building up some action there. Let's 2 minutes to open. Let's quickly look at Tesla here as well. It's gapping up and to the upside, very likely 157 should act as 157 50, 157.60 should act as decent resistance. But if that clears, and I'm still hopeful for it to clear that. I'm still hopeful for it to hit that 160 and then probably 164. And to the downside, very likely 153 area bounce if that breaches 150 to 60, and if that breaches again back to 150.50. This MFI is still crossed to the downside here, and we're looking for the push in MFI. And if it clears this number here, 156.20, that is acting as resistance right now. Then that clears, very likely 158.20 or something like that. That clears, we're going to push all the way into 160, 161 again. Right, 1 minute to the open. Let's move into live trading.